Okay, the background I think is well known. A number of very promising measures have been brought out by the new Modi government. And yet the outcomes till now have been frankly pretty bad. The corporate results for the last 2 quarters are among the worst I have seen in the last decade. So there is a gap between the new reforms, new measures, and the actual outcomes. I think it would be useful to have some idea of why this gap is, how it would continue. Also, I think we need to talk about the new atmosphere. I think the last 2 years of the UPA government, I saw American industry turn hostile towards India in a way which I had never seen before. I mean, it was the backing of American industry which led to a lot of the lobbying in favor of the 123 agreement. I mean, Bush had to push this nuclear agreement through, and he needed help. And he got that from American industry. And that same American industry, which was pushing for India back in 2005, had really turned against India by 2013. I'm glad to see, I see a new atmosphere now, a new eagerness to engage. The change is a welcome one. Okay, let's start off. Why don't each of you in turn give a quick summary of what you think the current position and the prospects are? Kaushik.
Thank you very much, Swami. It's a pleasure for me to be here. Let me also thank the Carnegie Endowment. This is for me actually a very nostalgic moment, because the last time that I was here, I usually don't remember dates, but I remember the date, 19th of April, 2012. And it caused a huge furor in India the following day. Ashley will probably remember. We were discussing something that Swami just touched on. I was talking about the slowdown in reforms in India. But it was a discussion which was a frank and open discussion on where things stood. I was very optimistic about India, but talking about the slowdown. And during my 2.5 years in India, it must have been 2 or 3 times that I've been woken up by a phone call pertaining to the economy. And after my Carnegie talk in Washington, I get a phone call saying that what is it that the discussion was about, because it's being reported very widely and causing a lot of controversy with questions being raised. So I remember I had to rush down in the morning, had meetings, and then during the 20th of April, a whole lot of meetings and discussions where I was explaining my viewpoint. I later discovered what had happened. I was talking about the slowdown reforms, but there was a reporter who also, to make it newsworthy, spiced it up a little bit more about what I had said. And it's that reportage which caused the storm. So thank you very much. Delighted to be back here once again, Ashley, and the Carnegie Endowment. Now, I want to get to exactly what Swami's focusing on. This was about 10 years ago at a meeting in Singapore, where there was a large number of Indian economists, Chinese economists, American economists, and the locals. We were discussing the global economy, and I had that time argued that there is a special relationship between the US and India for a variety of reasons. The two countries' commitment to democracy and secularism that you want to, it's written in the Constitution, you want to take it forward, was important. Geopolitically, for the US, the comfort zone when the USSR had crumbled and it was a single pole world was coming to an end very clearly. China was rising, and that's a very welcome arrival of a new huge economy, but it's not comforting for the United States to have a face-off with another pole. The worst kind of world for a big country is a two-pole world. You individually is the best, but if it's not going to be you individually, it's best to have a couple of poles. Who next? And India has that prospect. The only stumbling block was that India's economic growth, this is early 2005, had been decent from 1994, and the minister also talked about it just now, but the real takeoff occurred from 2005, when for 3 consecutive years the country grew at more than 9%. Today we are in a position where the economic part of it in India, and especially over the last 1-2 years, I have to say there is so much optimism that there is scope for the India-US relationship in this broader political domain to become the most important bilateral link between the two countries. If you look at trade between US and India, Indian exports to the US in the year 2000 was $12 billion. Now it's close to $70 billion. US exports to India 2000 was $6 billion. Now it's close to $40 billion. It's increasing in leaps and bounds. So the prospects are very good. You have seen reforms in India, one which was touched on by the minister. Extremely important, the goods and services tax, which more important than the pure taxation part of it, is it's going to cut down the bureaucracy of freight going from one state to another state. There is a World Bank study which shows that when an Indian truck with goods moves from one city to another faraway city, 60% of the time is stationary, and most of it is at checkposts because there are taxes to be paid, paperwork to be done. Imagine if you can have a taxation system where once when you take off, you may be stopped to clear certain things at your destination, no further hauls, the sheer energy that you can get into the country. The fact that there is discussion about improvements in doing business, the atmosphere in which business is done today being taken seriously, raises hope on this. So I feel there are moves going on. A lot of it is to be seen. It is still new. There is a lot of enthusiasm. And indeed, the expectation that was there, that this will become the vital link, among bilateral links, the vital link in the world is on the table in a way that has never happened. With that, let me stop, and there will be other things that hopefully I'll be able to come back to.
Very good. Mr. Mazumder?
Thank you very much. First of all, I'd like to thank the Carnegie Endowment and Ashley, of course, for inviting us and giving us this opportunity. And we've had some very good discussions in the morning, and you've got some more very interesting discussions lined up. My compliments to you. I just want to start with what you said. The government, and not much is happening. The government has only been in power for 14 months. And before the government took over, we knew that the economy was in shambles. Things weren't happening. Companies were performing badly. Banks ran up huge NPAs, and there's all kinds of problems. We've seen a growth of 7.4% in the last fiscal year, which easily makes us the largest in the world, the fastest in the world amongst the emerging economies. According to the International Monetary Fund, they say that the growth is going to be 7.5%. Our inflation is down to 5%. So some of the parameters are correct. Our engagement with the external world has really expanded. Our Prime Minister in the first year of his office visited 18 countries. And he's had many other leaders from other countries come and visit India. And also, it's not only the Prime Minister, the ministers also have been, giving the India story to the world. The amount of reforms that have been announced and some implemented in the first year of office, I don't believe any government has done that in their first year till date in India. Whether it's the increase on the FDI, opening up of the defense, and the Make in India program is a huge program. It's a huge announcement by the Prime Minister. I term it as the biggest announcement since independence. The reason is very simple. We are going to have people entering the job market, about 100 million jobs, I believe, in 10 years or something. And you need to create jobs. We have, in our evolvement from agriculture, we had little bit of industrialization, and then we went on to services. Services was the low-hanging fruit. Services is good, and today services account for more than 50% of our GDP. So the emphasis on manufacturing was extremely important, because manufacturing is what creates jobs. Manufacturing is what adds to the assets of the country. So from all aspects, manufacturing was important. Our exports are insignificant. We are still in the age of exporting textiles, of jewelry, and things like that. we need to start exporting high-tech engineering products. And the Make in India program, which Suresh Prabhu also talked about, it welcomes foreign companies. 100% investment is allowed. FDI is 100% for manufacturing to come and build in India and take advantage of the growing middle class population that we have, and also take advantage of moving out selling in other parts of the world. The other point I want to make is the tremendous efforts that have gone on ease of doing business. And I just want to narrate a little incident. I've just come from the UK, where we had a conference with the local chamber over there, and one of the participants told me, actually, and he told their audience when I was talking about ease of doing business, he says, we've been in India for the last 7-8 years, and I can tell you the change that I've seen in doing business in the last 1 year is profound. I thought that was very encouraging. While we are there, we are seeing some changes. But yes, true, but we are seeing incremental changes. Now, you can't expect, when the economy is being where it was, that you'd have big bang reforms and you'd really have everything turned around and happen immediately. It won't. It is better. What we are doing is we are building a strong foundation so that the growth is sustainable and attainable. We don't want quick successes, up and down, up and down. We want this to be a steady growth. I'll give you another example. In infrastructure, which is a huge area, which is $1 trillion spent over the next 4 years, this had gained a lot of momentum around 2010, 2012. But 13 onwards, we saw this really come to almost a standstill, or very little, and there were huge project delays, huge project hold-ups, and things like that. In the quarter ended June of this year, there was an 8% increase in the new projects that were implemented. And the last time anything like that was achieved was in 2012. So I'm just trying to give you some examples where clearly the results are beginning to show. Yes, they are not where we'd all like it, but it can't happen overnight. It requires time, and over time, I believe, we as industrialists believe that the reform agenda is going to continue, and we are definitely in for much better days. Thank you.
Thank you, Mr. Mazumder. Mr. Deep Kapuria. I think, some of the points I mentioned, one is, do you really believe this GDP increase? There was this controversial revision of Indian GDP. It suddenly went from 5.5 to 7.5. If you look at the corporate results, it doesn't suggest any such thing. Ruchir Sharma of Morgan Stanley has said that these figures have made India a laughingstock in markets across the world, and it's best to take the official figure and cut 2%. You will get closer to the reality. So yes, things have improved, but I said there was a problem on the outcomes. You look at industrial growth, you look at exports, it's so tepid. So, apart from the fact that some things have gone up, could you also throw some light on what appears to not be going right?
I'm going to take you on this, but let me just give you my context in terms of, first, of course, I'm absolutely privileged and delighted to be here this morning, and thanks to the Carnegie Endowment for having me here. It was not easy for me to travel because I just got back to India on the 4th of July weekend. And I was here in the US for a reason. And I was here along with a very large team from our company, that we were going to shortlist, not only shortlist because our team had worked over the last about a year, which state to invest in, but we were here because me being the chairman of this group, to finally close and say this is where we are going to put our investment. That's besides the fact that we did decide on Michigan, and I'll go into a bit of that because we are in the auto sector. And other than that my older son, who is now the managing director of that conventional part of this business, is from actually from the Michigan School of Business. So that sort of was a kind of a bias to be there. So we are looking at a twofold strategy, and the strategy is to put up an organic plant in Michigan for reasons that we are at a very high-end product, and something that Sumit talked about, that we are not just exporting some forgings or what. We are in the very high-end gear technology, and these are the transmissions. So if you are any of you are driving a truck, which is a Dodge Ram by Cummins engine, the engine gears would be from us, 100%. If you're also driving a SUV, which is made by GM, the all-wheel drive, the gears and the shafts will be from us. So to connect with the later technology, which like the CAFE regulations, which is coming in, the newer technology, and to get aligned in the value chain, we had to have a footprint in India, in US. And this would also help us in terms of transiting to the next level as in when it happens in India. The second thing that the association a very, very long association with at least with the name Carnegie that I have is my youngest son who has been from CMU, and he was there for literally 9 years in the RI, that's the Robotic Institute. And he was there as an undergrad, then as a postgrad, and then as a researcher. And then he decided to come back to India, and he has about 300 odd engineers working along with him, and he has some patents, and he also has an honor to be visiting prof to his institute, Carnegie Mellon, and he visits that every quarter or so as in when invited. And he has actually developed unmanned vehicle within India, also engaged with defense. Certain robots have actually saved the lives of soldiers who are fighting insurgent operations. So I just want to let you know that there are some things, while it was very fascinating to hear about the foundation getting built around this very mega deal of the civil nuclear deal which was done. But let me tell you, the main engagement, which sort of emotional engagement came when the 9/11 happened, and both my children were here, one of them in Carnegie Mellon, the other in Ann Arbor. So there we were, and we were already negotiating a joint venture with an American company to do the gears in India. So then, that's where the emergence takes place, and say that how connected we were in many ways. At that point of time, we moved the lines from our partner in South Carolina to our national capital region to produce high precision gears and then export back to them. And now we are to get attached to the newer programs which powertrain is getting reinvented here, and we are setting up a footprint here. And my younger son, who's from Carnegie Mellon, he always is looking forth. He has already a dormant company in Pittsburgh, which he is planning to revive and get to the robotic aspect, and probably this issue of engaging in defense is going to help. So I thought I should go a bit granular. We have been listening to all these 50,000 feet views, some of this, and I thought I'll bring it a couple of notches down to see what it is getting translated into. And luckily for us, because of our 30% produce being exported and all to the North Americas and to Europe, our corporate results are fairly okay. So we are one of the exceptions. But let me tell you that where do we see, in terms of automobiles, is also a reflective of the economy, and specifically the commercial vehicles. The moment the commercial vehicle industry in which we are engaged in as a company start to go down, we know that the economy is not doing well. And when you see the green shoots, the heavy commercial vehicle movement starts moving up. So I can assure you, sir, although that it's not moving in the pace we would like to, we have yet not hit the 11, 12 figures in commercial vehicles, but the heavy commercial vehicle has started, the demand has started moving up. We would like it to be better, but that's how it is. I'll leave it here and then probably come back to you with
yes. Okay.
whenever you ask me.
Mr. Modi.
So, first of all, thank you. Thank you for inviting us to this wonderful brainstorming session. Contrary to what I have heard a few minutes ago, I'm quite buoyant. And if anybody of you in this audience takes the pain and an effort to talk to 100 leading industrialists of India, they would share my opinion. We are in the most wonderful era of the history of India. Contrary to what you're seeing in a quarter or 2 quarters or 3 quarters, India is staged profoundly to take the big leap, to be among the big industrial economies of the world in the next decades. And there is a very simple reason for this: leadership. I come from the state of Gujarat. I have worked in that state throughout my life. And over the last decades, I have seen the progress, what good, honest, genuine leadership brings. I dare this audience to ask, how many of you on the stage and off the stage have seen real poverty? I dare. I dare to ask all of you what poverty means. India has the second largest population. People are not well off. There's a leader here who understands what it pains not to have a meal when we go home in the night. There's a leader who understands not to have electricity. There's a leader who understands that his children do not have good education. There's a leader who understands the profound power of empowering these individuals. That's what happened in Gujarat over 13 years. Ladies and gentlemen, sorry to say what I'm saying, but India is staged, and we are lucky and fortunate and blessed to have a leader and a leadership team, a wonderful leadership team. You've just heard one of them. And there are so many of us who are working honestly, diligently to make India great. Yes, all of us have history. All of us have a legacy. It's our duty as a leader not to crib about what went wrong, but to look in the future. And I think, therefore, I'm honored to be here and maybe sitting at the end to see what the mindset of people is. India is ready to take off. Look at the amount of good work which is being done. Have you ever seen, Mr. Aiyar, and I may ask you, a ministry, a group of ministers, a leadership team working so hard to help change the tenure and the mindset of people? And all of us have to some extent, people are reporting to us and working with us. If you want to make a change in a small group of 5 people in your office, or 50 people in your division, or 1,000 people in your company, or 5 million people in your state, does it happen overnight? What expectations are we talking about? All this myth is a media jinx. Expectations are from these people who have tears in their eyes. Expectations are in these people who do not have food on their plate. And that's what India is working for. It's just not for the big boys. The big boys will work with the government to make sure that there is food on the plate, there is education, there is skilling. And like we heard, 2 days from now, there's going to be a wonderful event at Vigyan Bhavan talking about claims. This is communication. We are in the age of communication, gentlemen, ladies and gentlemen. If a leader does not communicate, this is what we're going to do. This is what else is going to happen. Who is going to talk about it? So this jinx about over-communication and the jinx about traveling around the world is all crap. There has to be someone who has to take the horse by the rein and go ahead. So I think, I'll say more, but I just want to set the pace and the tone for these discussions as we go around. And since I heard that this is a very influential forum, I thought I might as well say a few good things which are actually genuinely happening for the first time in the history of our country. Thank you.
Thank you. Okay, so let's get down to the nitty-gritty. Kaushik, there was the issue of GDP. I mean, are we really doing 7.4? Are we really the fastest growing? And if so, why is it that the growth of excise duty is 0 or negative? Corporate results are so bad. So throw some light on this.
So let me do a little bit of a boring job of throwing a bit of light on the statistics. Just to put the cards on the table, I do believe actually the high growth figure that we are getting is correct. Correct within the margin of big statistical exercises have some problems, but it is correct. But let me explain a little bit. What happened was, first of all, now that I do cross-country work, I have to say, any big economic analysis data work has problems in any country, but India's data exercise is very transparent. So no matter which government is in power, what the structure is such, that you can see what is happening. It's virtually impossible to fudge because it's a very open process. But there can be complexities arising from the fact that calculating the entire country's productivity has problems, and one of them was, this is what India tried to correct, is that the corporate sector's value added was being underestimated for some technical reasons. What they tried to do was improve this. And with that improvement, it was found, and this is what you have to understand, that the GDP in India was a little bit higher than it was believed, a little bit. The year in which you adjust that GDP, you get a growth pickup in that year, which is primarily focused in last year, 2014, you get a growth pickup. But the higher growth that you get subsequently has very little to do with this correction, because just the line moves up and then the growth does not change. So this year's growth forecast is 7.5%. This is the World Bank forecast for this year for India. And that is not being affected or negligibly affected by the change in the standard, which moves the whole level up, but not growth. It's not that every year you're going to get higher growth or lower growth. The main adjustment was in 2014. And now let me give you a little bit of the background in growth. It was in the January World Bank forecast for the first time that the World Bank was forecasting that India would be leading the major countries' growth table from the year 2017. That we were expecting that the World Bank, this is our sort of technical calculation, that India's growth rate would overtake China's growth rate in the year 2017. It would be a tie in the year 2016. This was a forecast which was given out in January this year. Subsequently, and it is to do with both, certain things going right for India, picking up a little bit, and certain things in China's growth coming down a little bit, which meant that actually the overtaking would take place sooner, and we had to make adjustments, and now our forecast is this is the year when the growth overtaking takes place. But again, we must not lose proportions. This is growth overtaking. China is 4 times India's size. It's a big, important economy in the world, which is good news for the world, and growth overtaking simply means that the catch-up is now taking place. Nothing more, that gap remains. And this change in India, which actually the growth picked up in India first 1994, then 2003, big burst of growth from 2005 to 2008, slowdown during the global crisis, and a pickup after that. Now, with this, what has happened is, if you look at India in terms of purchasing power parity corrected GDP, India is now the 3rd largest. It overtook between 2005 and 2011, which is the purchasing power parity corrections take place with big gaps. India, at overall size, actually overtook Japan and Germany, and is now the 3rd biggest after US and China. Big gap between China and India, but it is still the 3rd largest in the world. So overall, in terms of broad macroeconomic trends, things are looking fine. The GDP correction means that we will have to keep working on the corners of that correction being corrected. But overall, I have read Ruchir's skepticism about it. There can be some questions about the methodology, but the growth rate is not being affected now by that. The level has been affected, but the growth rate is not. So 7.5 this year is a very expected forecast, and for next year, our forecast, the World Bank forecast, is 8% growth, which clearly does put India in a very dominant position in growth terms, not level terms. Thank you.
And of course, that doesn't happen with good hard work and policy, I may add.
No, let's hope that shows up in the outcomes. Mr. Mazumder, let's get to this since we're in America, foreign direct investment. To what extent have the prospects changed? Which are the areas where you think you are going to have a substantial amount of foreign investment, especially from the United States? Which are the key problems which remain, and how can we, there's been talk of intellectual property rights, tax issues. Which are the key issues that you think, I said, why don't you say something about the prospects and the problems?
The prospects are immense because, I talked about manufacturing already. That's an area, in fact, last night we were discussing this. Now we need to focus on the mid-sized companies. The mid-sized companies in America, which is the backbone of the country, and the mid-sized companies in India, again, which is the backbone of the country, need to get together.
How would you define mid-size?
Definition of mid-size. In terms of dollars?
Whatever definition you are thinking of.
Mid-size is a company, in Indian rupees, I would say, which is around 2,000 crores, 3,000 crores.
Market capitalization. Okay.
Yeah.
Okay.
Turnover, not market cap.
Net worth.
Turnover.
Okay.
Sales revenue.
So the mid-sized companies need to get together, and this is where a huge opportunity lies. The big guys can go and find their own partners or find their own way of doing business. Now we have to tap these mid-sized companies. Now there is huge opportunity. One is in manufacturing. The other one is in, I talked about infrastructure, which is $1 trillion spend. The smart cities that are coming up. There again, there's a lot of technology and capability from the US that can go there. So we're really looking for two things, technology and investment, of course. Because to achieve our goals, we do need foreign investment, and that is why the FDI has been relaxed to the extent it has. But I believe it's only the first step. It's going to get further and further relaxed as we go down the years. Some of the challenges, yes, is the ease of doing business. It is being worked on. The government recognizes this and is very cognizant of the problems. And as he very passionately said, you can't change the system overnight. There is a bureaucratic process. The minister and the leaders in the bureaucracy are committed to the ease of doing business, but down the line there is a problem. So we recently launched the Digital India program, where actually they are making efforts to reduce the processes. And one application should really send it off to the various departments it goes to give the clearances and be done within a period of time. So digital use would be very greatly used for ease of doing business. And the ease of doing business is taken very seriously by the government because they understand that the center alone cannot change India on this aspect. So they have involved the states. They've engaged the states. And they did a unique exercise. The government of India listed 98 parameters and told the states that these are the parameters you need to change, you need to improve for bringing about ease of doing business, and created a competitive feeling amongst the states. And this is a program that was uniquely brought all the states, irrespective of party, irrespective of beliefs, because every state recognizes that this is a concern in India because they've themselves heard from investors, more so from the foreign investors and also from the domestic investors. So there was a common purpose for this, and the government brought them together, and there was a competition. I know in our state, they were the second to achieve it. We had a big celebration on it. So this is a unique way of the government trying to tackle this ease of doing business issue.
Okay. So can I come in on this with one comment? One interesting feature of foreign direct investment vis-a-vis India is the remarkable achievement, and this has a plus side and a negative side, is foreign direct investment out of India into rich countries, which earlier was unthinkable. There are the iconic cases, Mahindra's in USA, Tata in UK. But actually, if you look at these numbers, there are several years in which more foreign direct investment from India has been going to Britain than from Britain to India. This was, of course, unthinkable. There are two reasons for that. One is good. The energy, entrepreneurial capacity, creativity in India is bursting over, and the other is negative. Doing business in India still remains tough with all the changes. It's a long history of a large transactions cost. There's a lot of work going on to cut that down. So that push factor and the energy has meant that India has done very well on this. On doing business, there is a lot of serious effort going on, but we have to be realistic. It's a huge country with very deep structures. So it will take time for this to be whittled down, to be made lean and effective. But I hope that the work will happen in earnest and we will see changes.
However, after, and there is a lot of people of you, first of all, thank you for giving credibility to the numbers. But after the formation of the new government, there are numbers, and the numbers state that foreign direct investment in India has increased and improved. As already stated, India's GDP growth has improved, and Make in India initiative is attracting significant global investment, which is going to be realized over time. So that is positive. It's not only the negative growth has flattened out, but there is positive. So there are real numbers to be.
Can we get into some details? I said, which are the areas where you think the greatest prospects for US investment, foreign investment, and some more specifics on the problems that have arisen in regard to intellectual property rights or taxation? What do you think are the ways forward?
So Aiyar, I've been following your column very, very ardently and very regularly, and I know that you do raise some very profound questions and you're looking for such answers, and hopefully we can sort of talk about them in some sense. I'll start with an aspect of made in India. It should not be misunderstood that it's a protective measure. So that in many ways is collaborative. Collaborative for a simple sense that it looks through the value chain. It doesn't talk about, although in a way that it could be understood as manufacturing footprint in India, but it's not about that. It's about the whole value chain and how it gets evolved and where it gets done. You know, today products are global. It's like what Pascalemi said, that today no product can be marked as made in one country because it's thought out in one country, it's researched in another country, it possibly gets together and the parts get manufactured. For example, our gears. We supply to Daimler in Germany and Fuso in Japan. So is that German truck a German truck, or is it made along with Indian gears? So it has huge ramifications if we look at the whole value chain and how the value chain can come together benefiting both sides, and that is where the opportunity lies. So it is joint research in many, many fields, partly, and we are experiencing that in our own company, where we have Carnegie Mellon students coming and some of the PhDs who were along with my son actually working there. And this is a joint project. There is an aspect that we are doing, which is Global Innovation Alliance. It is technology, which is acronymed GITA, on which I'm on that board, where bilateral funds are flowing, and we would definitely want US to be a part of it, because we have the Indo-Israel Fund, we have the Indo-UK Fund, we have the Australian Fund, we have the Canadian Fund, and why not the US Fund to take this move forward. Then, besides the auto sector, which has huge now, we already are setting up automation plan. In 2026, we would be making close to about 12 million pass cards, which becomes very substantive. We are at 3.2. We have a capacity at about 5 million. We have investments which are already there, but a lot more in terms of how the actual legislation and the regulations, which mean emissions, which means consumptions, how they can come to India. So this is going to be a flow of technology. So that's another major contact point. Then if we talk about smart cities, smart cities, what do you mean by smart? And how do you get engaged in? Digital India is just one component of it. Many of the countries have now got inducted into this program with consortiums. So one like Siemens from Germany is looking at a consortium of people who can contribute to the smart city and come together with a funding. So why not in US? Although Cisco is engaged, but they are more looking at connectivity rather than the whole plethora of getting it smart. The green technologies, we hear so much of it. What is this Clean Ganga effort? I mean, it means huge amount of investments coming together of entrepreneurs. It's B2B contacts which will make it happen and create value at both sides. And it is this flow of value which needs to get transferred from one part of the other. And we are actually, in our company, we are living it. You know, we are a mid-sized company. We are hoping, we are about 150 million US. We are hoping that with inorganic growth in the US, we'll very soon get to about 300 million size. But that is where I think all this work is going under the radar. A lot of these mid-sized companies, I know a lot of our friends, besides of course Bharat Forge, who's invested, they're more visible, but there are a lot of smaller companies and mid-sized companies who are engaging. And that's another platform that we need to come up with to engage the whole supply chains. So if there is a defense and aerospace program which is on, it doesn't mean the big boys. It means an ecosystem for the first tier, the prime supplier, and then the second tier supplier and the third tier supplier. So how do you get them together? And that is where the whole value add is going to happen. And if the defense industry in US is going down, they can very well engage with a partner in India to look at this aspect of value creation. So there is a lot of things specifically in some of the sectors which can happen. And of course, you know, we talked about infra financing, etc., but I'll leave it there.
Okay. Mr. Modi, you're connected with the pharmaceuticals. I mean, this is one of the biggest Indian growth industries. I said, because of that, I think all the top fellows have more sales abroad than within India. They are globalized to that extent. It is also an industry where there has been massive Indian investment overseas. And at the same time, some very massive investment by foreign companies in India, like the Piramal being taken over at a massive valuation of 9 times of revenue. At the same time, this is the area of the maximum discord. When I said I saw 2 years ago the way American industry turned viciously against India, the thing that I got hit again and again and again was the intellectual property rights. So I would like you to sketch out what is the dimensions of the problem, is there some way around it, and what are the future prospects?
So thank you for bringing that up because with the India-US economic cooperation and trade relationship at the macro level, I think there is significant progress after the new government. And the context is, I'm setting the context. With the new government, formation of trade policy matters has streamlined. Working groups which were formed with the US, India are actually now in active discussion, negotiation. The same things you guys said about talking, meeting, touching, feeling has already begun significantly over the last 12 months. So that whole bit of communication, a gap in communication did exist. As we all know, gentlemen, trust and reliability are fundamental for a meaningful relationship. So there was a disturbance in the trust and reliability, and I think that is regained significantly. More importantly, and before we go into details, the National IPR Policy Framework has been launched in a very, very transparent fashion. So the biggest issue of what does India stand for its IPR? There's a document finally after a long time which has been launched, and the National IPR Policy Framework is going to address the concerns for the regulation of the intellectual property rights. Coming back to the pharma industry, we in India are very proud of all the industries, but more so for our IT and life sciences. It's the progressive visionary policies and the pressures of a small economy which led over the decades for a very progressive policy which made Indian entrepreneurs in the pharmaceutical world to produce medicines in India, to develop medicines in India, to produce them in the most cost-effective fashion, because that had to lead to supplying medicines and having large access of medicines to the various strata of the population. In hindsight, that has been so wonderful for our country, because as we sit on this stage now, 1 in 10 tablets or capsules consumed by a US resident is made in India. Can you imagine the impact of the generic pharmaceutical manufacturing industry? Now, when I say make in India, it is make in India by companies of Indian origin, it is make in India by companies of European origin, it is make in India by companies of US origin. So, all the companies, like you use that word, which were anxious about market share and competition and who takes what aspect of the pie, have been challenged, because it is a reality that prices of products in medicines in the US economy, and we talk of US India, have been much more affordable over the last 5, 7, 10 years. And that is significantly caused because of our high quality, reliable ecosystem and supply chain of making medicines in India. So, needless to say that Indian companies, Indian entrepreneurs, Indian businesses are in this realm around the world, not only for the short term, but the long term. Because there are early signs of not only make medicines in India, but of development collaborations of making medicines in India, which I guess all of you understand in this very intelligent audience about the future. So there is tremendous inroads of developing medicines in India, and more importantly, of innovating medicines in India. And there are examples, and I don't want to get personal and talk about real examples by giving individual examples, but there is already the beginning of innovating new medicines in India. So this is one of the star industries of our country, and it not only benefits the Indian population, it benefits people around the world. The billions of people who get well, stay healthy by taking Indian medicines in India. But there are billions and billions of people around the world. Go to any country in the world, and one of the areas you will find is the population of that country consumes Indian medicines. So Indian medicines are safe, Indian medicines are affordable, and we are so excited of the future that over the next 10, 15, 20 years, Indian companies, again, both Indian origin, global origin, will not only develop but also innovate in India. So that is a picture. That's how I think we should paint. We have a government, both the governments looking very positively to enhance bilateral trade. Conversations have started. Differences of opinion, gaps of opinion, and if someone was trying to put a fast one, they're being sort of cornered and talked about. As we all know, some people are smiling in this audience, so they know what I'm talking about. But also the enhanced communication and the fact that heads of state believe in the model of collaboration, believe that the model of collaboration will benefit not only citizens of United States, citizens of India, but citizens of the world, and so many other things which I've talked about, puts a very strategic connotation to the Indian pharma relationship. So, while we hear what we hear and we see what we see, there is some truth to it. I mean, quality standards have to be harmonized around the world, and the quality standards for, again, a lot of economic, political, and other reasons are getting changed over time because of vested interests. So, but India industry is not only catching up, but is taking leadership in understanding and coming up to the expectations of quality standards of the world. So yes, there are some odds and all going on. But I would be, for one, especially talking from this platform, say they are of tremendous strategic importance to India and US. Yes, there are colleagues and players who would like to look at it differently, but I am so confident that in future you will see enhanced, positive camaraderie and partnership and friendship among the industry, both in India and America. So I would, discount what we see. It's an aberration which will go on for a little while, but it will go to the positive. Because, as you know, the health bill, the Obama healthcare bill, which, I don't want to get into that controversial area here. There are some execution issues which some of you know, but it's so profound, and that needs support from countries like India, which is especially a very evolved pharmaceutical industry. So I'm very, very positive. What we are seeing are aberrations, and that's it.
Kaushik, I'd like to take you into this new area that's coming. The United States has more or less given the WTO a pass. That, the World Trade Organization, India blocks this, India blocks that. It's very difficult to get a consensus. So there are now these two huge agreements the United States is negotiating, a Trans-Pacific Agreement and a Transatlantic. On the one hand, the kind of areas where this is focusing on is not the traditional just reduction of trade tariffs. We are getting definitely due to much stronger intellectual property rights, labor issues, environmental issues, climate change issues, various things which India would not have allowed in WTO, but which are going to come up in these two. And there remains therefore this huge problem that if these negotiations are successful, India may just find that, it's cut out of it relative to the people who sign on. The second issue is equally strategic. The United States will never admit it formally, but many people will say that these two new partnerships are aimed at cutting out China, that these are actually anti-China moves. Again, nobody will formally admit this, but in the process, as far as I can see, there's a danger India will get cut out too. India does not, at this point of time, have any locus standi in either of those two partnerships. We don't seem to be near it. I don't see any attempt to move towards it. And we would also find it difficult to move towards it because some of the issues on the table, intellectual property rights and other, we don't want. So I see a huge threat, maybe not next year, not year after, but I see a huge strategic threat in what happens if the United States ties itself into new trade agreements which basically cut out India and China, and what happens.
One of them which I've studied more, the Trans-Pacific Partnership, on balance, my view is, I should tell you, from the point of view of United States, it is worthwhile, is my view. There has been controversy, different people taking different views, for the reason that I feel in the end, the first feeling with this is, I'm talking of within country opposition, is that it could hurt US labor if you go in for it. But every time you have a partnership where trade eases up in a big cluster of countries, and these 12 countries, right, the Trans-Pacific, it's a huge cluster of the GDP. You are opening up within this. Yes, it is true that there will be some parts of US industry which will come under competition because you've opened it up to 12 countries, and some parts which will do better. But that, I feel, in the long run is good for the country, in the same way that if the US had decided that it would protect its automobile industry, say in the 1980s, that it will just put up barriers and not let others come in and protect that. US today would have a bigger automobile industry and a smaller economy because you would have protected one sector and lost jobs elsewhere. So from the US point of view, I feel it is worthwhile. You're right that with India, it is a bit of a bystander being hit risk is there. So because I don't think in the geopolitics of this, India is coming in, but there is a bystander because India will be outside of this. Here are two things that has to be kept in mind. I mean, for India, there are pros and cons of being enthusiastic about trying to join in one of these partnerships. Is some of these partnerships will come with certain labor standards issues, which can be a bit controversial. Because labor standards, I've long taken a view, is that you cannot go for a single labor standard across rich and poor country clusters. You do need labor standards, but you need something which should be called ratcheted labor standards, so that depending on your per capita income level, you ask for different standards. And if you try to bring in a cluster of country with exactly the same standards, then either the minimum wage law will be too low for the rich country or too high for the poor country. You need gradations in this. So this for India right now is, I think India's outside of this is fine. This is going to, it looks like it's going to move. I feel it is worthwhile for it to move. And then this is not central to India, but if it is moving, if India's labor standards are beginning to improve, which should happen with the growth coming in, then you take stock of this and decide to try to move into this or not. We've seen these in other areas. Nuclear is a good area. So I don't think India should actively participate in this. But then if it is moving, make moves, give signals to come into this. And from the US point of view, I think it is a worthwhile direction to move in.
Anybody else have thoughts on this particular issue? Because frankly, if you're going to get cut out, I mean, if the WTO is going to give way, and there are two other things which are going to have a higher standard, and all those members are going to be at an advantage compared with us, what happens?
So going forward, I don't think it's a matter of getting cut out, because 50 years ago, 25 years ago, when the size of our economy was at a different level, I think getting cut off made, neglected, not relevant. But again, Mr. Basu mentioned a very interesting statistic. You said India was, after US and China, the third largest price parity economy. So, sort of from a toddler, if I were to use that word, you've sort of grown up. We're still teenagers. We're not in the big boys yet. We're teenagers. And I think we are not a force which can be very easily let go. We have to say what is right for the population of our country, which is why we have leaders who will say the mind. And I think what you are seeing is just a negotiation sort of story. Because even if, tell the worst scenario, it's not going to happen, but even in the worst scenario, if India was cut off, the level of GDP in India and the tremendous amount of growth and opportunity is so huge even within the 1.4 billion of our country that we can dare to stall. So I don't think we are going to be cut off. I think the world is recognizing us, but it's not a gloomy picture at all. I think we are on the move, and we will continue to be on the move, nevertheless. That's what I feel, and many of us feel. And again, like I said earlier in the meeting, talk to the top or significant 100, 200 industrialists who are affected by this, and you will get your real answer.
Kapuria?
Do I have the answer? No, but as I've been engaged in the multilateral forum for a very long time, since Cancun, I've been on the sidelines representing the industry. There are dynamics which are at the multilateral level that the Doha round is totally lost. I mean, the developed nations don't even want to talk about that anymore, and that is getting scuttled. If India is championing that, is that a fault? It's just, as a value system, if we are looking for food security, is that our fault? And in terms of resolving having a perpetuating peace clause, does it make sense rather than just resolving the issue? And is it a kind of a pressure point with TPP and TTIP? Is that a pressure point rather than this mega plurilateral agreement that is being talked about? Is that the truth? And is it going to happen with all these issues which will emerge? Will it not be a more difficult process than the multilateral process? So it is yet, I think, in a better plane, if this is my understanding of things. The business-to-business contact, to my mind, will prevail. That is what is going to make economic and commercial sense, and the business and business contacts, wherever they see value, the capital is going to flow, the people are going to flow, and the business is going to flow. This is my understanding of a very, very micro understanding through a very small keyhole.
And I wanted to just add something to it. I'm a slow thinker, so while they were speaking, I've thought of something else. So let me add that. Actually, I agree with you all. These partnerships are not a fort against the rest of the world economy. It is trying to make goods and services flow more easily within these clusters. So in some sense, and this with the European ministers meeting right now is not an ideal example, it's the construction of the Eurozone or EU. It of course makes it easier for them to trade with one another, but it's not necessarily bad for the rest of the world. In fact, if this segment begins to grow and do well, it is good for the rest of the world to be able to trade with this segment of countries trading together. And for India, the comparative advantage, I think this is what you were saying, is so large. Labor is much cheaper. And if we can make business processes easier, trading easier, and there is also a lot of scope for that, then it is indeed possible that this partnership is actually good for India. It's going to turn out to be in the long run.
Very good, thank you. I think it's time.
May I just add one point to this? That incidentally, we are working on standards. And there's a lot of work that is happening. at various levels. At the WTO forum, we are observers in many of the cases. In auto sector, we are a part of WP29, which is, and we have signed certain agreements around those standards. So there is a harmonization of standards which needs to happen in either which way is there. But is the ANC going to be harmonized with ISO, and is that going to be harmonized with our Indian standard is going to be a challenge, like what Mr. Basu said. But we are working on it, and we are engaging with the ANC, and we are having dialogue with them.
I think it's time to throw the issue open to the floor. If there are any questions, please say who you are and who you would like to answer it. Okay, let's start here. Can we get a mic here?
Good morning. My name is Veronica Cartier. My research is focused on conflict management initiative. I have two questions, one in the security sector and in the economy sector. Today, India has become global major player and emerging market supported strongly by President Obama administration. U.S.-India strategic partnership in security sector, in particular, I think U.S.
Can you ask a question, please?
Goal in Asia Pacific.
Can you ask a question,
I will.
please?
So, in my question in security, as India has joined the Shanghai Cooperation Organization, SCO, in 2005, and also now you expansion business throughout the world. My question is that what mechanism that you have implemented to protect India from espionage? Because India-US security, if anything happened to India, perhaps will affect US. And the second question in economic sector. India expansion throughout the world in economy, especially maybe throughout ASEAN country in Southeast Asia. Does India expansion to Southeast Asia, do you consider Indonesia will be a strategic partner considering past and present political culture and engagement? Thank you very much.
Next question.
I mean, I don't think this is a panel for answering the issues like intelligence. We can't go into that particular matter. This is a question of commercial relations and especially the business relations. There was somebody at the back there? Yes?
Tom Timberg, consultant. This is really directed toward Mr. Kapuria, and I hope their business school studies and so forth also going forward. As somebody who is now investing heavily as an Indian corporation in the United States, what kind of internal, not external, internal challenges do you find in adjusting your operation and in coping with the eccentricities of American workforces and so forth? To what extent, what challenges are there, and what is your experience with them?
Wherever one sets a geographical, which is a footprint, wherever it be, and let me tell you, within our country as well, we are very multilateral in terms of cultures. So we have a plant which is in the south of India. We have to deal with the issues which very, very differently than we would deal in north of the country. So I think the reality is that we look at the major value system, but let the local culture take root. So it is something on that lines. We do not ever are going to be thrusting anything upon the entity which we are looking forth for inorganic growth or in terms of organic growth, the acceptance of the local behaviors, the local way the people think needs to be the same, but the overarching value system as to how you treat the customer, how you treat the people within the company shall be integrated and remain the same. I think that's, I don't know whether that is a very brief answer, which I thought.
Could I just make a point here, please? You know, I have no experience of investing in the US, but I have a lot of experience of working with US companies. But the point I want to make here is we are all aware how there are many Indian companies that have invested in the US and are working very successfully and growing from strength to strength. So obviously all these are not issues that one worries about. They're very, as he said, you know, you look after your customer, you look after your people, you're there. So there are hundreds of examples of this.
Yes, please, here.
Hi, so Ray Vickery. My impression is that the TPP, the WTO, the Atlantic Trade Initiative are all designed to open markets and make trade flow more freely between the countries which are in them. Is there any interest among Indian industry in initiatives to open the Indian market further and correspondently open other markets? What I basically hear mostly is objections to opening, and I hope that that's not the complete picture.
So I think, sir, that's again an issue of communication. It's absolutely unfounded that India is not open for business. There are statistics, and again, there are more qualified people who can give you statistics. The policies of the government which was in power and is currently in power now, India is more open to doing business. And there are lots of statistics which support that. So first of all, it's a misnomer, maybe unfortunately communication, that India is not open for business or not welcoming foreign direct investment. In fact, foreign direct investment is increasing. Make in India initiative, as I said, is attracting investors from around the world. It's just this historic rhetoric where India and the Indian companies and the economy did not benefit. And again, there are statistics which say if there were bilateral trades between India and a country or India and a group of countries, the export of India out of India was much, much lower than the importation. And that statistic, when one looks at over the last 20, 30 years, makes one wonder, let's pause, let's understand what's going on and participate. So there is no question of not participating. We want to participate, we will participate, but just as we understand what the dynamic is.
You know, in the aspect, India is a market economy. That's number one. We have the applied rates are much lower than the bound rates. So we are in the process. I think there are very few items which are not open. But let me ask some questions that how the businesses, which is a non-market economy like China, how they are treated vis-a-vis India. You know, I know for certain because we can't export our auto components which we supply around the globe to China for a simple reason that original equipment manufacturer cannot manufacture products unless they have tie-ups. And I can give you ample examples. Shanghai Industry Automotive Corporation has 250 joint ventures with auto component makers. It has 3 joint ventures with original equipment manufacturers, which include GM, which include VW. And each one of these, they proliferate the technology so freely that it is just amazing. Through the test houses, they have parallel shops set up, which have sometimes similar boundaries, and I have been there. I've seen that. But nobody talks about that. If they need the development, and I know about this, that if a Euro 6 standard engine is to be developed, they are arm twisted to do the R&D work within China with the Chinese engineers, and the proliferation then happens. So what kind of standards do we have the same scale for measures of market economy and of opening markets, or are they different in terms of the yardsticks? And that would be my question.
Okay. At the back there. Yes.
Seema Sirohi, Gateway House. I had a question for Mr. Basu. It's to do with India's ranking in the ease of doing business. I believe certain problems have been spotted in how the ranking came about. So if you could just shed some light. And a general question to the panel about APEC. What are the views? Should India join? Because US now favors that India should join APEC.
So, Seema, let me just talk about the doing business. India is ranked at 142 among 189 countries that get ranked. There have indeed been questions about some particular measures, whether they are capturing right the ease of doing business. To that, my response is actually, you hear the one vis-a-vis India, but virtually vis-a-vis every country, including rich countries, questions come up, is this measure right or wrong? And here is the response. You know, again, when you are tracking a country's 100 indicators to decide whether it's easy to do business in this country or not, there's very difficult to think of these 100 being the perfect 100 that you are picking on. But one thing that we try to do, and ever since, you know, earlier, 3 years ago, I used to watch doing business from outside, from the Indian side when the numbers would come out. Now I'm on the manufacturing side of this. What is done actually very carefully, I have to say, it's exactly the same standard is taken to 189 countries. So you collect data on 189 countries. At times, this means that it's not a perfect fit for a particular country. So what do? You don't want to make exceptions. But I'll give you one example, which does not pertain to India. How easy is it for you to take your products from your country to the border from which it exits to the rest of the world? After we started looking at it, it became clear that for countries which are landlocked, part of the problem is another neighboring country's exit procedures. So the method you're using is unfair for those countries. But again, every time we want to change something in the ease of doing business, when we get some country pointing out that there are problems, we have to make exactly the same change for 189 countries, get a better measure and get it going. So yes, and I have to say with India, the partnership has been very good because the government has been very positive on this. On a couple of measures, yes, there are disagreements, but again, if we make changes, it will have to be made across the world as we do with all countries in the world. But what is very heartening is, it's been a very, very positive exchange because I think India is very serious to treat this measure as one measure. There are many other measures as one measure, which is seriously trying to say that, look, don't try to just do better by this measure, but use this as a crutch to improve your bureaucracy, decision making, and make it quicker so that decisions are quicker, it's easier to start business, it's easier to close business. And on that, actually, we are working very well right now with India.
Let's come down here.
Good afternoon, sir. I'm Padmaja Chunduru. I'm heading the State Bank of India US operations from New York. My question was partly answered by Mr. Kapuria when he said that the ease of doing business in US is better. But we are handling a lot of investments from India. And we see a lot of Indian corporates, especially the mid-corporates, finding it very difficult to acquire a unit or even set up a business. Some states are very tax-friendly, and they are inviting, but still I find that the same complaints that we have in all these fora against the Indian ease of doing business, probably some of them for the mid-corporates have to be smoothened out between the US and India. And with the Exim Bank in the US being under this flux, I think it is actually attaining more importance now. The second point I was reading somewhere that trade has now become more geopolitical in its all these fora for trade, all these associations. So, as Mr. Modi said, India being a big market, I think it cannot be ignored. And the other point is the
Excuse me, do you have a question?
yeah, I have a question, sir. Is the new development bank that the BRICS bank that is now named the new development bank, is it a way of India to promote its trade? Because I also understand they're going to do it in the local currencies and not necessarily in the dollar.
Take this.
I can take the last one a little bit. In the BRICS Bank, and then there is the AIIB. These are the two big initiatives. On the BRICS Bank, for India and China, it's very different kinds of motivations that are driving. China has a lot of money. Its foreign exchange reserves are huge, over $4 trillion. India's has gone up now, it's $350 billion. China wants to deploy this in countries, not just these 5 BRICS countries, but even elsewhere, to use this for investment. India has huge infrastructural investment needs, and will be needing some of the money to put this into effect. China has an interest in making its currency a global currency. So I don't think on this it is India and China, all of them doing that. China has an interest, and you are seeing this in from SDR to other moves. China's moving on that. India is on the verge of that. I don't think that's right now on the cards. But 3-4 years down the road, it is something that India can also begin to think of. And yes, these are sort of vehicles through which making your currency an international currency is a possibility. But right now, that's very central to China, which it is not for India.
If I may just add on just the comments that as the mid-sized companies are coming here, like we did a survey for literally a year of various states, and our teams were moving around various states. The cost of compliances in many of the states are very, very different. Each and every state, you can negotiate in terms of how many jobs you're going to create, and thus these are the kind of benefits that you would get. And you cannot, as a company, and the company team cannot negotiate it. We had to appoint a lawyer in Michigan to go negotiate with the state. So there is the way of doing business. Because, you know, including me, I got educated in US and my sons as well. So even though we know this, still the complexity of is doing business is different. And the forward-looking thing is that even if you're creating 20 jobs or 50 jobs, the governor is ready to see you, and his team will take you to your customers and facilitate even selling your product. So that's a major shift.
Yeah. Okay, back there.
Since China is growing its economic empire by investing in like many countries in Africa and other parts around the globe, and although India, like just 2 years ago, there was a bad economic situation. I'm not using the proper adjective, but anyways. But we're not talking about now. But 3-4 years down the road, if India truly gets like a strong, more stable economy and really wishes to expand its financial empire, where are the regions it's looking to expand in? And when it invests in those areas, is it going to be mostly trying to counter China areas, or like concede some areas to China and look for fresher areas to invest?
Anybody like to take that up?
I don't catch the question actually. It was,
you know, I heard about 1 in every 4 words. So based on that, I'm guessing what your question, and I'll give you an answer. So
where is this going?
Yeah. So, you know, in terms of overall growth, Africa has been doing very, very well. So if you're talking in terms of where does India's trade and investment extend to, Africa is indeed a huge potential. One of the main drivers of Africa thus far has been China. If you look at the money going into Africa, it's just very large, and that is causing a lot of the African growth. But if Africa keeps up a growth of this, I think on average it's 4.8% growth for the continent. South Africa is pulling it down a little bit. If you leave it out, it's a bit faster. If you take that, this is indeed a zone where there's going to be much greater trade and capital flows. And India's Exim Bank already does look at this and study as to how you can position yourself vis-a-vis that. So I think that is indeed going to be an important field.
Okay, one last question. Okay, out here.
Hi, my name is Prasad Kadambi, and I have a company in India trying to offer nuclear safety consulting services. And what I've been finding in the last 4 or 5 years is there's a very strong fear factor associated with the word nuclear and nuclear technology. Lots of companies who like the idea of being associated with nuclear, but they still somehow feel that it's an area in which, as a commercial enterprise, there are going to be huge barriers, and they are very reluctant to get in. I'd like to know, what is CII doing to break down some of these different things? Maybe each of you, rather than CII, you can talk about whether you have found this to be a fact and what you can do about it.
You wanted to say?
No. In terms of this, we are facilitating in a number of ways, and I can tell you that not only the larger companies like L&T, there are number of second-tier suppliers, and I don't know where you get that impression. There are a lot of small and medium suppliers who are engaged in the supply chain. So I'm just wondering, because SNC from Canada is there in India, L&T doing a huge amount of work, and they have this ecosystem of even small suppliers who are servicing their needs. So I'm a bit confused as to what really are you specifying. Maybe next time I would invite you to come, look us up in CII, and we'll help you facilitate, have a dialogue with some of these companies.
Okay, thank you very much. We've had a productive session. I think we'll now break.
Thank you so much, sir.